geography. Emerging alliances and shifting economic power centers are redefining how nations collaborate and compete. At the heart of this transformation lies a dynamic and resilient banking ecosystem that must constantly adapt to new risks, new regulations, and new possibilities. The theme of this edition of KMA InsightX, Beyond Borders, Banking in the Era of New Trade Alliances, invites us to explore how financial institutions are navigating this new reality.
May I now invite Ms. Kirtana S. Prabhu, first year MBA, Bhavan's Royal Institute of Management, for the invocation. I request everyone to remain seated.
माणिक्यवीणा उपलालयन्तं मदालसां मञ्जुळवाग्विलासा महेन्द्रनीलद्युति कोमलाङ्गी मातङ्गकन्या मनसा स्मरामि मातङ्गकन्या मनसा स्मरामि लोका समस्ता सुखिनो भवन्तु.
Thank you, Kirtana. To formally welcome this distinguished gathering and introduce the speaker, I invite Mr. Dilip Narayanan, Vice President and Program Chair, KMA. Sir, please.
President Mr. Hari Kumar, distinguished Chief Guest Mr. P.R Seshadri, Honorary Joint Secretary Lekha Balachandran, past presidents, members of the Managing Committee, invited guests, my dear KMA members and student chapter members, good evening. It gives me great pleasure to welcome you all to the 16th edition of KMA InsightX series. And the downstairs hall is also full. Thank you for making it a big turnout today. What makes our InsightX session meaningful is not just what happens here tonight, it's what happens after the session. The conversations that continues in your boardrooms, the debate that spills into your offices and classrooms, the post some of you write on LinkedIn, the messages you send to Secretariat, the follow-up questions you ask. This is where InsightX truly lives. This is not a one evening program. It's an ongoing dialogue. And each of you keep that dialogue alive. And today's theme is exactly the kind of subject that deserves such continuing dialogue and conversations. The global economic landscape is shifting rapidly. Trade partnerships are being redefined. Geopolitical alignments are influencing markets more directly than ever. Capital is moving differently. Banking, therefore, cannot remain local in its thinking. It must read global signals, anticipate change, manage risk intelligently, and position itself for opportunity. That's why today's discussion is both timely and strategic. It's my privilege to introduce our speaker for the evening, Mr. P.R Seshadri. Mr. Seshadri has been the Managing Director and CEO of South Indian Bank since October 2023. He brings with him decades of leadership experience across commercial banking, enterprise management, and international markets. Over the course of his distinguished career, he has served as Managing Director and CEO of the Karur Vysya Bank. Before that, he held multiple senior leadership roles at Citibank across India and Asia Pacific region, spanning lending businesses, sales and distribution, consumer finance, structured finance, and enterprise leadership. What makes his journey particularly distinctive is this combination: deep global exposure and strong local knowledge. Years in an institution like Citibank gave him perspective on global systems, cross-border capital, and large-scale operations. Leading Karur Vysya Bank grounded him in the realities of Indian banking: customers, regulation, regional markets, and execution on the ground. That blend of global perspective and domestic execution is so powerful. And it is perhaps reflected in the renewed momentum, strong financial performance, and growing market confidence that South Indian Bank has demonstrated under his leadership. He has worked closely with investors, boards, and regulators across geographies. He has built large teams, scaled businesses, created new growth engines, and navigated complex environments with clarity and discipline. An alumnus of Delhi College of Engineering and IIM Bangalore, he combines analytical rigor with strategic foresight and operational depth. Today, this evening, he will share his perspective on beyond borders, banking in the era of new trade alliances. Ladies and gentlemen, please join me in giving a warm welcome to Mr. P.R Seshadri, Managing Director and CEO of South Indian Bank, to deliver today's InsightX series. Thank you.
Thank you, sir, for setting the tone for this evening. May I now invite Mr. K. Harikumar, President KMA, to deliver the presidential address.
Mr. Seshadri, Dilip, Lekha, past presidents, managing committee members, and dear members of KMA and students. First of all, thank you very much for such a wonderful audience. We are having one of the record attendance today. This hall is full. The downstairs hall also is full. I don't know whether it is banking which brought all of you here or it is Mr. Seshadri. Anyway, thank you very much. We all have seen institutions evolve. And the evolution of a bank or banks is something which all of us have personally experienced. Those who are senior in age must have seen the banks evolve because they have seen it over a longer spectrum. I don't know whether Mr. Seshadri may not be knowing, in good old days in Kerala, when the Gulf boom was at the peak, out of 3-4 members of the family, one used to stay back only to do the banking operation. Because that much money used to come, and going to the bank itself was an occupation. It was a full-time job. From there, look where the banks have evolved. It is actually the banks which we used to see even during our younger days are not the banks which are there today. And I can surely vow the banks you will see tomorrow will totally be different. Let us just look at how the banks evolved. Earlier, the banks were basically custodian of money, because banks used to keep money. Bank is where one used to park the money, or even gold much before that. When the civilization started, banks started got into lending and even got into legalized trade and all that. Afterwards, banks again evolved. Banks evolved to formalized lending, and then credit instruments started coming. So likewise, it continuously evolved, and then it got international, and lot of things kept on happening. when the industrialization era started, the system started getting regulated. It became branch oriented. It became paper driven, basically because you had to document all these things, and relationship driven. That is why you can see a lot of relationship managers even now in the bank. Then came the era of the digital banking, wherein ATM started coming, CBS came, internet, mobile, all these things came, and then actually the driving force became technology, and data became the core asset. That is how the banking system changed. Now it is a time of digital banking, neo banking, and a lot of new things are also happening. From predictive models, it has now evolved into predictive rather than reactive. So a lot of change is happening in the banking spectrum. And now we are talking about beyond borders banking in the era of new trade alliances, wherein lot more things will happen, and banking will become, actually it will start facilitating more of trade, and the challenge of the banks will move from currency diversification. Banks will change to currency diversification. It will even change to currency realignment. We are also talking about de-dollarization because of many things which is happening across the globe. And when new markets emerge and new trade alliances come, like BRICS came in, lot of other trade alliances, local alliances are also going to come in. With this, local risk assessment also is going to come. And with the compliances increasing, the compliance requirement, local compliance requirement also will increase. And it is not necessarily the big banks will succeed. Banks which are more adaptive, it's true for any organization. Organization which can adapt will succeed. And competition among the banking companies, banking organizations will be on the trade corridors, it will be on the digital rails, it will be on the payment systems. Lot of change is going to happen, and the banks which you see today are not going to be the banks which you are going to see tomorrow. So what is going to be the challenge of people like Mr. Seshadri who is heading banks? Basically, like any other institution, the challenge is to prepare the organization for facing the challenges of tomorrow. Tomorrow is unknown. Lot of variables are there. Nobody knows how the whole thing is going to behave in the future. But as long as humans are there, as long as wealth is getting generated, as long as people want money, banking system is going to remain. How credible we can make it, how it can facilitate wealth multiplication, how it can facilitate trade, not only domestic, international trade, that is going to be the challenge. So that is going to be the challenge, and Mr. Seshadri will be definitely talking about banking in the era of new trade alliances, because we have been hearing trade alliances a lot. And I welcome you all once again to this meeting. As Mr. Dilip was saying, this is the 16th meeting of the InsightX series, and InsightX is only one of the many activities which KMA has. So kindly remain connected with KMA, because a lot of programs are coming up. Even next week also we have scheduled a program. So once you come in, you will also get exposed to lot of arenas, lot of activities which are happening across spectrum, because our talks are not limited to any particular area. So please remain connected, please attend KMA meetings, please get yourself abreast of what is happening in the outside world. And I thank you once again for coming in large numbers, and thank you.
Thank you, sir, for your inspiring words and continued leadership. Our distinguished speaker for the session, Mr. P.R Seshadri, Managing Director and CEO of South Indian Bank, a visionary leader with deep expertise in banking and financial transformation, known for his strategic clarity and forward-looking approach. He has been instrumental in steering institutions through phases of change, innovation, and growth.
Today, we are truly fortunate to have a speaker of remarkable insight with us, who will help us in understand how emerging trade alliances, geopolitical shifts, and evolving capital flows are transforming the very fabric of global banking, and how Indian banks can position themselves for resilience and sustainable growth. May I now invite our beloved speaker, Mr. Seshadri, to deliver the keynote address.
Thank you very much for a very generous introduction. Mr. Hari Kumar, Mr. Dilip Narayanan, Ms. Lekha Balachandran. Can you hear me? Yeah, okay. Dignitaries of the dais, ladies and gentlemen. At the outset, I am actually very, very touched that there are so many people who thought it worthwhile to spend an evening listening to me. I never thought that there would be so many who are willing to spend an evening here talking about a rather mundane subject, which is banking and so on and so forth, not something that actually gathers large audiences. So thank you very much for being here. Thank you, KMA, for inviting me. I really greatly appreciate it. I've been in the banking business from 1991 onwards. Banking, and I joined a small bank called Citibank in Chennai in 1991. At that time, banking was very different from what it is today, and Mr. Hari Kumar spoke about it. At that time, everything that we did was on paper, and every time you had to access the bank, you had to go to the branch. And that's what Mr. Hari Kumar was talking about. And when he was talking about one member of the family being based in India so that the banking could be done, because it essentially meant that a human contact was necessary to do something. But those were also very good times for banks, because if you worked in a bank branch, you knew your future was secure, that you would be very busy all through the day because so many people would walk in through the door and transact business. Today, you don't need to go to the branch for anything. There is nothing for which you must go to the branch other than for operating your safety deposit locker. And the irony is, the safety deposit locker is not really banking business. It is something that we offer because creating the vault is expensive. The door itself costs a lot of money, and then we have to reinforce the rest of the building to ensure safety and security. To recoup some of those costs, we offer these safety deposit lockers so that you can store your valuables safely. But it is not core banking. It is the only function that we carry out in the bank which is a fiduciary function, which is in the sense that it is something where our capital is not deployed. We have to protect your valuables to the best extent that we can, and therefore we are a fiduciary to whatever you've kept in the locker. And normally as a banker, we would hate to do anything that is fiduciary. There's a difference between fiduciary and a contractual relationship, and we normally tend to work with contractual relationships as opposed to fiduciary. And this is the only thing where we are a fiduciary. And fiduciaries are held to a higher standard of care than a mere contractual relationship. Anyway, when I joined the banking business, banks used to have three monopolies, three very distinct and deep monopolies. And as you know, monopolies are very good for those who possess them. They're not good for other people who have to deal with a monopolist, but monopolies are very good for any institution that is a monopoly. So we had three monopolies. One is we had a monopoly on the payment system. Every time you had to make payments, you had to come to a bank. You had to get a demand draft, send a telegraphic transfer. Those were the methods of making payment, and the banks were part of the payment system. The second monopoly we had was a monopoly on lending, because these non-bank finance companies didn't exist. or they were very small. There were very few of them and they were very small. Relative to the banks, they were very, very small. And third monopoly we had was on the savings of individuals. Now, you come forward 30, 35 years and you see that two monopolies have gone. Essentially, the payment system has been democratized. You can make payment using Google Pay, Phone Pay. There are hundreds of other mechanisms by which you can make payment. The monopoly on lending is deeply challenged because now there are non-bank finance companies that are larger than banks. So there are, like a Bajaj Finance is larger than, I guess, the top 15 or 20 banks in the country. So there are many banks which are smaller than Bajaj Finance. And the third monopoly, savings, in a contractual savings structure, still exists, but unfortunately mutual funds have grown to a rather large size, and they are taking a portion of what was savings that were coming to banks are now going to mutual funds. So as a bank, our business has evolved. 3 protected areas where we were operating are no longer protected, and we have to operate. But what has happened to the banks themselves? The banks themselves have grown really, really large. So the bank that I work for, South Indian Bank, if you were to go back 30 years and look at its balance sheet size and to compare it today, you will find that the balance sheet size has grown 400-fold in this 30-year period. And that is the magic of India. Essentially, this is something that has happened because economic growth in India has taken place. This is not something that would happen in any other part of the world where strong economic growth has not occurred. So, if you go to Europe and tell somebody that your balance sheet is going to grow 400-fold in 30 years, they would think that you're smoking something, but it's feasible in India. And I think over the next 20, 30 years, these balance sheets will grow another 300, 400-fold. So I used to work for Citibank, and I was part of the senior management team which used to meet once in a year in some nice exotic location in the United States. And I remember having lunch with a gentleman called Bob Crittenden, who was the CFO of Citi. And at one of those meetings at the lunchtime, I happened to be sitting next to him. And Mr. Crittenden, who was the CFO of Citi globally, we started talking, and I was asking him questions about the very rapid growth of Citi's balance sheet. So after a while, he got tired of me and he said, look, it took us 190 years to go from 0 to $1 trillion in balance sheet. And it took us 10 years to go from 1 trillion to 2 trillion. So, and then of course, the global financial crisis came and most banks had to deleverage and so on and so forth. But what I'm trying to say is, in an economy that is growing quickly, and the United States is an exception for a large economy. It continues to grow at 3 or 4%, whereas Europe grows at 0.5%, 0.25%, and so on and so forth. So fast growth will enable banks to grow. And banks such as ours, in an era where monopolies are getting destroyed, have to create other competitive advantage. And the way the banks have done it is to grow in size. Very deliberately, every bank has said, okay, we don't have all of these protections, but now we have to create protective moats for ourselves, and we will do that by growing in size. So today, State Bank of India is very close to being a $1 trillion bank. So very soon, I think in a year or two, State Bank of India, you will see advertisements saying, we are the first Indian bank to have $1 trillion in assets. And if you were to go back 15, 20 years, State Bank of India itself was 30 billion, 40 billion, and so on and so forth. So you can see how quickly, size is growing. And that's what, surprises me about people in our country. This is the land of opportunity. Especially after I came to Kerala, I found, and I'm technically from Kerala. My forefathers hailed from Palakkad. Unfortunately, I had never lived here before, and nor do I speak Malayalam, so that's a little bit of a difficulty. But having said that, I'm technically from here, and one thing that struck me was the willingness of everybody in Kerala to want to exit the country and stay someplace else. And I, in my career, have lived in Singapore and London and worked for extended periods of time in the United States, and I've come back essentially because there is more opportunity here than in most other places in the world. And the other thing is, we Indians are different from people in other parts of the world. Relationships tend to be very, very transactional in other places. Here they tend to be a little bit more human, sometimes too human, which is a bit of a problem. But having said that, a little bit of humanity is necessary. And if I were to go back and redo my own career, I left India in 2005. At that time, I was the CEO of India's largest non-bank finance company. I left to go and live in Singapore, where my employer was Citigroup, who took wonderful care of me. I was really paid well, and I was looked after wonderfully. But if I had not done that and I had stayed on in India, I can assure you I'd be much richer today than I am right now. And that's the scale of the opportunity that India provides. But that's an aside. The topic for today is beyond borders, banking in an era of new trade alliances. I don't really know how to address this subject head on. But I can tell you one thing. Banking business is evolving. It is changing very rapidly. Every day it changes. In the last 5 years it has changed. And we in India are at the very edge. We are at the cutting edge of banking globally. If there is one business in the world where we can stand up and say that we set the rules for the world, it is perhaps banking. We have the world's best payment system, and we have an extraordinarily high quality banking system overall. So there aren't very many places in the world, even in the United States, if you want to transfer money from here to someplace else, it may probably take you a couple of days for money to go. In the United Kingdom, where I did work, there are 3 payment systems. One is called BACS, the other one is called CHAPS, and third is called faster payments. Faster payments is the closest that we have to IMPS. Okay? BACS will take you 3 or 4 days to get credit. CHAPS will give you credit the next day. You compare it with us. We have UPI. For a 10 rupee payment, you can make UPI payments at the click of a button and the money goes. There is no other country on this planet that has a system like this, not even China. China, the payment system is owned by WeChat, which is not part of the national infrastructure. So our banking system is absolutely world class. And the reason for it to be world class is that it attracted high quality people for a long period of time. It's much easier to work in an office than to work in a machine shop. It's also more comfortable. You don't sweat. Our country is hot. You sit in a nice office. You can go home not particularly sweaty, and your wife doesn't turn away from you when you come there, which is not possible if you're working in a machine shop. So we got a lot of bright people to work in this industry, and as a consequence, we made progress. There are issues with our systems and processes, but those are legacy issues. So for instance, when it comes to ease of doing business, there are challenges. So for instance, when we write a home loan, today housing loans are a big business, right? Most people would have taken a housing loan to buy their own homes because younger and younger people are wanting to have a roof over their own heads, which they consider their own. Now, there are 3 or 4 risks that obtain when you're writing a housing loan. One is title risk. How do you know who owns this property? How do you know that the property title is getting transferred to whoever is buying it? The other is something called price risk. How do you know how much that property is worth? Is it worth 100 rupees? Is it worth 90 rupees? Is it worth 75 rupees? And the third one is something called interest rate risk. So we lend money to you at X rate, but if the loan is going to be outstanding for 25 years or 30 years, how does the bank manage the fluctuations in interest rates over a period of time? So there are 3 principal risks that we have to manage. Now, in a Singapore or a Australia, title is a single page document. I don't know how many of you have seen the title of your own properties that you live in. It would resemble Encyclopedia Britannica, and it will not be a single page. Right? The other thing is, how do you value properties? Appraisal. So in a country like Singapore or Australia, if somebody wants to sell his property for $500,000, the document which will be executed between the 2 parties will say $500,000. In India, there is something called a guideline value or fair value or whatever. So the document will say so much, and then there are brown paper envelopes that get exchanged. That creates all kinds of problems because we don't know what the property is worth. And interest rate risk is a different ballgame altogether. It's a technical subject which I don't want to bore you with, but it's an area that we have great difficulty in managing interest rate risk. It's also on the other side called price risk, but we'll leave it at that. Now anyway, today we are talking about borders, banking, alliances, trade alliances, and so on and so forth. That itself is undergoing remarkable change. When I started my banking career, I think the General Agreement on Tariffs and Trade, which was basically the precursor to today's WTO, was in place. And after the Second World War, the United States wanted to create a free trade regime globally. And the whole view was multilateralism. I mean, that there should be one agreement and everybody should be bound by the same rules. So as long as you were given what is called most favored nation status, the tariffs that would apply to you would be no different from somebody else who had similar status. And therefore, it was a much easier world to actually navigate because these were not driven largely by bilateral treaties. They were more multilateral treaties, and it was easier for you to understand what was happening. All of that, including the general premise that trade is good, have now been shelved. Ironically, by the world's most dominant power, the United States of America itself. Up until Mr. Trump in his current avatar, the view was that trade is a general good. And basically the view that trade is empowering and enriching to everybody who engages in it was the idea that drove most people. So there were basically the view was that somebody is good at making something, so they should make whatever they are good at making and they should import everything else, because that is the most efficient method of running your own business or the country as such. The view now has become much, much more mercantilist. The view is that when in the old days, in the 1700s and 1800s, if there was a deficiency in the balance of trade, gold would go away from your country because you ended up paying for everything in gold. In the current age, nobody gives anybody gold, everybody is giving each other dollars. And the reason why the the irony is the reason why the United States the United States dollar is the reserve currency of the world is because the United States ran large current account deficits for so long, and as a consequence got dollars into the hands of so many people. So if you've got dollars lying in your house, you've effectively extended credit to the United States of America. And that was this, huge privilege that the US had. But for whatever reason, their view now is that trade is not a good, and that it needs to be managed in a way that is beneficial to them. And that has driven the world away from the earlier multilateral approach to much more bilateralism. So it's made it much, much more complicated for individuals to engage in trade. Now, the role that banks play in trade has also changed. So historically, banks came into being to make trade possible. They addressed the issue of trust. So basically, when I'm buying something from you and I can't see you, I haven't met you, let's say you're buying from somebody who's sitting in UAE or Italy or some other place, you've never met this individual, so you're going to enter into a contract with this individual and you're going to pay that individual. You don't trust that individual because you don't know him or her. So the trust deficit was addressed by banks. So there were two banks. There was the seller's bank and there was the buyer's bank. And the transaction were structured between the two in such a fashion that we could remove the trust deficit. And that was done through something called documentary letters of credit. The strange thing is, the documentary letters of credit business is declining globally, because trust can now be addressed in many other fashions, many other ways, and the globe itself has shrunk. So the traditional method of dealing with making trade happen, banks are very, very capable of dealing with. They can provide people with assistance. The Indian banking system is extraordinarily robust. So our trade, which hopefully in the next few years will hit about $1 trillion on one side of the balance sheet, is something that I think we can comfortably help the country achieve. But I think where banks become much, much more helpful is on the local front. I think there's a lot that we need to do in this country, which requires capital. We need more businesses than there are currently. We need those businesses to, grow, and when they grow, they provide employment, they provide other opportunities to people. So on the local side, our ability to finance businesses has never been better than what it is today. The difference between the 2020s and the 1990s, when I went to work for the first time, is that our political classes now talk about economic growth, they talk about wealth creation, they talk about becoming a developed country. The entire language of politics has changed. I still remember when I was, just joined my first job, elections were just around the corner and the slogans were Garibi Hatao, Roti, Kapda and Makan, or Makan, I don't know, sir, you will remember, 20-point plan. So they were all at a, if that, all of you are management students, I'm told, very many of you. So there is this Maslow's hierarchy, right? So we were at the very bottom of the Maslow's hierarchy. So conversations on the political front were also sort of centered at a level which is very different from where we are today. Today we really have the ambition of taking this thing forward. And for making that happen, banks are absolutely central. But one area where we do still have a problem is, prevalence of capital. Banks can provide loans, but we cannot substitute for equity capital. And equity capital continues to be in short supply when it comes to small businesses. The total number of businesses which have more than 10 crores of rupees in capital in our country, when the last numbers that are available, if you look at it, is only about 14,000 companies. I'm talking about capital of 10 crores. It's a very, very, very small number for a country of 1.5 billion people. There are, of course, companies that have 100,000 crores of capital, but we need to have many more companies that have larger capitalization, because that allows banks to give them more money and for them to grow faster. And much of this is because of the fact that in India, the culture of trying to avoid paying taxes and do stuff using cash as a mechanism of settling trades effectively limited how much you showed in your balance sheet and your P&L. And the net impact of that was that banks were also limited in how much business they could do with this particular individual, and that put a cap on how much this business could grow. So with the increased formalization of our economy, with more and more people being in the tax net, I think many of these issues will get addressed. And when capital becomes more readily available, equity capital, risk capital becomes more readily available, the banking system is ready to provide, debt capital that enables these businesses to grow. I think we have to generate, I don't know how many hundreds of millions of jobs between now and the next 10 or 15 years. And we can actually do it because we have a very entrepreneurial class of people. We are very, very hardworking generally. And I think as long as the stars align properly, and as long as the overhead, which comes from regulation and laws, are managed appropriately, I think we do have a wonderful future together. So I don't know if I have tried to address Mr. Hari Kumar's question on beyond borders banking in the era of new trade alliances, but I'm very happy to answer any questions you may have. So with that, let me conclude here. Thank you very much, ladies and gentlemen. Thank you for being here today. Thank you.
Thank you very much, sir, for that deeply insightful and thought-provoking address. Your perspectives have certainly given us much to reflect upon as we navigate upon an increasingly interconnected financial world. We will now open the floor for a brief Q&A session.
Thank you, sir. Sir, one question on rupification. Now BRICS is actually active. I think March there will be a separate rupification will accelerate. What do you think about that process? Whether India will gain or rupee will stabilize?
Sir, we'll have to wait and watch. What BRICS is going to do is in the future, sir. One thing is very clear, the world is at a crossroad. Things are happening that have never happened in the past. I don't know how many of you have seen Mr. Marco Rubio's speech in the Munich Security Conference. What he said in the Munich Security Conference would have been unsayable a year or so ago, because it was talking about colonialism in a very positive sense, and he decried what he sees as weakness in the Western world and so on and so forth. So I think the world itself is going through change which we have never seen before in our life. I think the US dollar is no longer the only currency of choice. I think many central banks have tried to de-risk themselves. Ever since the Western world put sanctions on Russian central bank assets and froze central bank assets, I think the worry that inside money, I mean, when you have money which is somebody else's liability, it's called inside money. So, inside money is susceptible to this kind of activity. So that's why gold prices have gone to whatever it is, $5,500, for $5,000 and so on and so forth, because there's been a very significant central bank buying over the last 2 or 3 years, ever since the Russian central bank reserves were frozen. Now, coming to rupee, I think there is going to be a push to try and find alternate currencies so that you can trade and alternate mechanisms to trade. I don't know, maybe Mr. Hari Kumar, there are very few of us who will remember the rupee trade agreement that existed between us and Russia. The rupee trade agreement. So we've had rupee as a settlement mechanism in the past. Till 1971 it was legal tender in UAE as well, right? So rupee as a mechanism of settlement has always been there. The question is, how the world evolves, what happens, how powerful BRICS get, relative to the rest of the world will drive all of this, and why should it be rupee? Ultimately, why will it not be the Chinese yuan or renminbi or whatever? Why should it be the rupee? I mean, do we have any natural advantages that we can rely on? It's hard to, I don't know. I wish I could answer this question better, but I really don't know.
And also you mentioned about the evaluation of the appraisal process. Now that the agreements are written with the proper value, the bank is actually paying against that. So what is the challenge in that valuation? The market value anyway, the bank will not give the loss, right?
So, sir, let me just answer this question, sir. Basically, we don't know what the value is, sir.
No, that is correct. But the banks are relying on the document basically.
But the document itself, we don't know whether it is trustable or not. Yes, sir.
Sir, myself, Joe Sukro. I am into steel, cement, finance, and real estate. When you are talking, you took us to Singapore, Australia, and US. A very good speech. You made a very good speech. And regarding the property, you told about the property. Now, if I am buying a property for 1 crore, the guideline value will be only 25 lakhs. So how the bank will finance? How much the bank will finance for that?
See, that's where the problem is coming, sir. Ideally, whatever you pay in black, the bank should not be financing because we don't know anything about it. But banks have found a way out of financing even that. The problem is how people account for it. I mean, if there is, if the tax authorities are really capable, they should be asking this question: where did this money come from, and where did it go? But having said that, there are other methods, sir. We'll talk offline. I don't want to bore all these people.
Yes. Recently, we had a meeting in Kerala Real Estate Association. Your bank people have sponsored that meeting. So the first time in my life, in the last 60 years in banking, I am in doing business. So first time I have seen the banker has come to a real estate association. A large number of your staff was there. They have done wonderfully well. I am really congratulate you for that. Because I know this bank, my home, my bank, South Indian Bank.
Thank you, sir.
Yeah.
Thank you.
Why I say this? I have been with my father to the Coimbatore branch. Ground floor is the branch. Upstairs is the residence of the manager. We used to go banking the daytime, and night we have the cocktail dinner in the first floor. So that was the relationship we had with the bank. So now, compare with all other banks, new generation bank, you have come a very fast way, and I really congratulate you for that. Thank you.
Thank you.
As Sir, can I ask a question? Today had been a landmark day in the annals of Indian history. We had a very serious AI conference being convened in Mumbai, where all the majority of the world leaders and also the industrial leaders were there. So you were mentioning about a few risks which were there initially, like title risk, interest risk. See, are you anticipating something called a human capital risk, maybe coming forth in 5 years or 10 years down the line? Will human capital be necessary for banking or any finance industry with AI making inroads, Anthropic developing cloud, and will humans be just onlookers for job? Many youngsters are over here, they are anticipating jobs in the future. What will be they thriving for in the near future with AI making big inroads?
I wish I could answer that question. I'll be honest with you. See, this AI is different from earlier advancements. AI has spread faster than other similar, new technologies. Essentially because a series of old technologies were there which could be used to make AI grow much, much faster. So internet came in 1994, 1995, then mobile phones came subsequently, desktop computers became much more powerful subsequently. All of this has enabled AI to spread very, 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 very rapidly. And the capabilities of these AI are also evolving at a remarkable pace. So how they will evolve and how they will impact business is very hard for us to actually talk about at this point, other than for certain very specific roles. So if you were to write some code and you are going to build a new piece of software, there it appears that AI can now pretty much replace human beings. But to integrate that code into that software and into that process, human beings are still required. So the last mile problem on the coding side is still, I think, a problem that cannot be addressed by AI. And we also have some legacy systems, different platforms. All of those cannot be actually solved by AI. So human beings are still required even on the technology side. Now, impact on front-facing customer-related roles. I think there is a lot that is going to change. So for instance, in the past, when we had a contract, so our legal team will say, okay, this is the contract that your customer has to sign. Then customer will sign something and it will come back, and somebody had to spend 2-3 hours painfully reading through both contracts to see that there is no difference. This was somebody's job. Today AI can do it in a few minutes. You scan the damn thing, scan the original, scan the other one, it converts it into text and compares the text and says, okay, here are the differences if there are any. Otherwise they say the two documents are the same. So there are some roles where AI is helping. There's another role where we use AI in South Indian Bank. See, historically transactions used to happen in the branch. And basically at the head office level, we don't know what is happening in the branch. And branches have a lot of rights. So they can debit an account for 25 lakhs and send it out if necessary. The thing is, they're supposed to have a paper base. Customer has to come and give us the authorization to do something. So banks don't do anything on their own. So we have to be told by the customer to do something. And then what has been told has to be in a particular form that is acceptable to us. And third, we have to authenticate that it is the person who is supposed to have told this has actually said this, right? These are 3 or 4 rules that we follow. But we had very limited visibility as to what was happening in the branch. So today, in our bank, every transactions that happen, we ask them to upload the vouchers associated with all those transactions. So AI reads it and then compares it with my system, saying that for every transaction, is there a voucher or not? And it does that the next day in the morning. So if there is anything that is not there, it gets flagged and somebody calls the branch and says, hey, how did you do this transaction? You know, these are kind of things that are happening. These are capabilities that we never thought we would get. And from my point of view, it gives me great comfort because I'm scared. Some rogue person in my bank branch can, you know, they have so many rights that they can do things that can impact the bank very negatively. So those things which we never thought could be done are doable today. So how this is going to evolve, how jobs are going to be impacted, is something that it is going to impact jobs. I think there is no question about it. I think there are going to be changes to how we work. It's like how changes happened when computers got introduced. Like Mr. Harikumar, he'll remember banks were on strike for long periods of time because they said no computerization. So like that, you know, there will be changes, but I suspect that they will create new opportunities as well. So AI itself will create new opportunities which young people of today will have to fill.
Thank you, sir. I just want information regarding KYC. Whether it can be done digitally for all the banks or certain banks are insisting on coming to the branch for that thing. KYC completion.
Technically, we can do video KYC on. So all banks will allow you to do video KYC. Under what conditions they ask you to come to the branch, I don't know. But technically, it's possible to be done through video, with a live person video. So we also allow that to happen. So it's not mandatory to come to the branch. There may be certain conditions under which the bank will be saying that we have to do KYC. See, the problem is that the Indian banking system has become, the payment system has become so good that it has now become the conduit for crime. So criminals are using the banking system more and more and more. And you know, things like this digital arrest and all are happening, and then the money flows through the banking system, and then within minutes it vanishes. So banks are also now becoming more and more worried about who is holding this bank account, and therefore they've become a little bit more strict on things like KYC. In the past, a bank account was not misused in this manner by criminal elements. So that's the issue.
Sir, my name is Ashwati S. I am first year MBA student from Bhavan's Royal Institute of Management. So my question is, what could be the regulatory challenges in the era of banking new trade alliances?
I don't think there are any specific regulatory challenges. I think the challenge is going to be more as to what those trade alliances actually allow us to do. See, we have gone from a multilateral system to a bilateral system, which means that two countries are negotiating with each other. Earlier, under GATT or WTO, large parts of trade were, as long as you were, you know, most favored nation status, you got similar tariff as everybody else. So you didn't need to negotiate with somebody on a bilateral basis. Like with the United States of America, we didn't have a specific trade deal. We were working under the WTO and other such rules. So now the issue is going to be, we'll have to, with everybody, there'll have to be a bilateral trade deal, and then we'll have to work with that. And tomorrow, Mr. Trump will wake up on the wrong side of the bed and take from 18% to 36%. You know, those are the kind of issues that we'll have to deal with. But there is no, to the best of my knowledge, there are no regulatory challenges as such.
So good evening, sir. There is an increasing competition from the mutual funds. So what's the USP that the banking sector can leverage over to maintain the competitive advantage?
Our USP is that, you know, every once in a while, stock markets drop like a stone. And yes. And then people realize that contractual returns are very valuable, and then they come back to us. Yeah. Good evening, sir.
I'm a banker turned entrepreneur. See, I've seen 2 decades of banking where you're exactly said, as a customer for bank, no need to come to branch. It's a fact. Once I have moved as an entrepreneur, I've noticed one thing. For international trade, for exporter, see, for him, regulatory is cumbersome. For sending the document and receiving the fund, now we have an AI and machine learning, blockchain is available. Still is a cumbersome. What do you see that another 3 to 5 years of time, how it is going to be seamless? Applicability of AI in export, trade, international trade.
Sir, some of this is also because of regulation. Because, historically we were a dollar-starved country, sir, if you remember. And I don't know, in the old days, Mr. Harikumar will remember, if you went overseas and you needed dollar, you will get it from a bank and they'll stamp your passport and all that. All that has stopped now. But many of the things that happen on trade haven't changed very much. So there is a system called IDPMS, EDPMS, for which we need to get bills of lading and so on and so forth, or remittances, and all those things have to get uploaded onto the Reserve Bank of India site. Now, I can't talk about the rest of the banking system, but what we are doing is we are building a new system where, with a focus on foreign trade and FX, where almost everything on this can be done online. So customer can log in and upload all of this, and we can automatically, set off these IDPMS, EDPMS documentation. If you want us to open a letter of credit, you can give us all the details and we will seamlessly open it for you. You don't have to come to my branch. We hope to go live with everything in the next 3 or 4 months. But this is a very, very tightly regulated business, sir, because FX is involved, and Reserve Bank of India tends to be very, very cautious on the foreign exchange side. I always thought we were an outlier, sir, when it came to the amount of regulation that existed on foreign exchange. But I recently came to know that in South Korea, there was only one crime for which you could be shot or hung or killed. I mean, death penalty was possible, which was for FX-related crimes. So we are in good company. So I mean, we have very tight regulations, and some of this problem is because of that. What has happened is, sir, our current account deficit, if you take into account invisibles, has been shrinking. See, in India, we keep saying that the rupee will keep declining, and indeed it has declined in recent times. But actually, if you look at the trade balances, and if you take invisibles, which is basically worker remittances plus software exports and other such invisible exports, our current account deficit has come down from 10% of GDP to less than 0.5% of GDP. So ideally, there is no need for the rupee to depreciate. The rupee only depreciates when foreigners are selling Indian stock. So every time you see the rupee move downwards, there will be FII selling in the Bombay Stock Exchange. So I have a feeling that once the current account deficit is addressed even more, because as a country, our exports have really increased. I mean, most Indians are not aware as to how much it has increased. And as that position becomes better and better, some of these things structurally will get removed. That's my view and hope.
Sir, I have a question. Continuing your answer. I'm a fool. I always thought that value of rupee, that term, value of rupee, is associated with value of country. Rupee value गिर गया, country का value गिर गया. Do you think is that correct? I thought the other way around.
No, sir, the rupee value is not linked to anything, sir. So if you see the rupee note, it says, I promise to pay the bearer a sum of rupees so much, right? So, sir, I mean, I think the question you are asking is It's more on the nature of money.
The newspaper, media, people, politicians, everyone says that rupee value came down, so country's value came down.
No.
I always thought it's the other way around.
Sir, I think right now the Reserve Bank of India also allowed the currency to depreciate because our exporters were hurting. So, to a degree, they would have been helped by rupee depreciation. But if the trade deal with the United States is now inked and signed and all of that, then perhaps they won't be so willing to allow the rupee to move. Because otherwise, they would have intervened and they would have stabilized the rupee. They were more willing to let it go a little bit. So we don't know. My own view is that the rupee is, the structural weaknesses of the rupee have long since been addressed. And going forward, we should see the rupee which is much more stable.
We'll take one more question. This will be the last question. Mr. Bedukopar.
We speak about digital banking. I find, most of the banks are increasing their branches. Even your branches, you are increasing. Most of the banks, every year they are increasing the branches. So how this tally? And now AI is also coming.
We have not increased our branch. I mean, since I have come to this job, federal perhaps has increased. We haven't. Many banks have increased. I agree with you. Generally, we are one of the few in countries where branch count has increased. Especially the young people here from the management schools, I'd urge you to go to Google and search bank branch count, United States, 2015 to 2025. Okay? And similarly for United Kingdom. In the United States, bank branches are down by about 1/3, 33% reduction in bank branches. In the United Kingdom, it's even more dramatic. It's almost 50% reduction. India is an exception. Branch count has actually risen here. Part of it is because our new generation banks are new. So, HDFC, ICICI are 30 years old and they don't believe that they have got the full complement of branches that they need. And I think part of it, but that is the logic that I had. But it's also, I noticed that the nationalized banks are also growing. So it's not them. Everybody seems to be putting out branches. But frankly, I don't know what those branches are going to do in the future, frankly. And what is the role of the branch? See, putting a branch and doing clerical work inside the branch is not a very sensible thing to do. Because branches are very expensive. They occupy prime real estate. Bank officers are very well paid. So, so we have not grown our branches. We've actually shrunk. I joined the bank, it had 955 branches. We are now at 948. Though, of course, my board wants me to grow branches. So we are trying to find places where we need to put branches like Andhra Pradesh, Tamil Nadu, where our distribution is not as good, which we will do. But we wanted to actually become much more profitable and create the ability to absorb those additional costs before we did all of that. It already has, sir, affected ATMs. Actually, total cash withdrawals every month are reducing in number and quantity. But cash in circulation is not reducing. Cash that is being withdrawn from ATMs is reducing. So, so there is, in fact, most people's ATM count is actually dropping. Because less and less people need cash. Most people are carrying their phone and paying with UPI.
Thank you very much.
Thank you for those engaging questions and insightful responses. As a token of gratitude, now I would like to invite our President, Mr. K. Harikumar, to hand over a memento to our Chief Guest, Mr. P.R Seshadri. Thank you, sir. As we come to the close of this enriching session, I invite Ms. Lekha Balachandran, Joint Secretary KMA, to propose the vote of thanks.
Respected President, Speaker of the Day, Mr. Seshadri, Dilip, dignitaries of the dais, and invited guests and all other KMA members. It was an excellent speech, as all of you know, and thank you so much, sir, for making us proud being an Indian. And it was really really grateful that to know India is one of the leading advanced IT in banking, and we are all feel proud of that. And to the new gen, making them understand that Kerala is the best place to work with and to live with. Thank you so much for that. And thank you so much for the interactive session. Too much of questions, and you answered very well for that. And thank you so much for that. And thank you all for being actively participant in this interactive session. And so glad to see hall is full, basement hall is, first floor hall is full. And KMA always believes to have good people, most good subjects. In every Friday we hope. Some gap was there due to the conclave and all. Hope to see you every Friday. Thank you so much for being here. Have a great evening. Thank you.
Thank you, ma'am. May I now request everyone to kindly rise for the national anthem.